It's day 4 and I'm so excited, right? New tax reform system that everybody has been talking about. Now let's get to what I have for you today. If you have not subscribed to this YouTube channel or you are not following me on Instagram, I don't know what you are waiting for. I don't know what you are waiting for. It will not cost you anything. Support me, encourage me, subscribe, follow, share with your friends so they can, learn 1 or 2 things about this new tax reform system. Now, let's go into it. So, if you are running a registered company in Nigeria, whether it is one man business, a limited liability registration for only you are the director, or 50 people, I mean, government expects you to pay company income tax. That is CIT, right? And I'm going to talking about what company income tax is really all about. Now, company income tax is a tax that is charged on the profits of registered companies, right? Private limited, public limited, foreign companies doing business in Nigeria, right? So it's actually governed by section 23 to 30 of the Nigerian Tax Act 2025, right? So it applies annually. Is money you pay annually based on the financial position of your business, right? So which means your profit is equal to your revenue minus your allowable business expenses minus losses if there are any, and your capital allowance. I'm going to be breaking all this down. So who should be paying CIT in 2026? SMEs and startup registered as limited or PLC. So company registered but they are yet to be making money, you must still file. Okay, you must still file. I'm not making money is not an excuse. Foreign company with a digital or physical presence in Nigeria, they are still expected to file. Companies that is offering consulting service, marketing, digital solutions, tech bro, tech sister, you have a business register with CAC, you are still expected to file. Businesses that is doing federal contracts, right? You need your TCC now, tax clearance certificate, so you are still expected to file. If you recently upgraded from business name to limited liability, welcome to company income tax filing. So you are no longer going to be doing payee. Payee is pay as you earn. Remember, if you are just watching this video for the first time, go to our previous go to start from day 1 so that you can understand what payee is all about. Small companies are exempted from company income tax if you meet up with I'm still going to be talking about the threshold, right? But you must still file your returns, and that's one of the mistakes most people made. Like, I've not started operating, we've not started generating income. You are still expected to file. Filing is different from paying. So now, if you fail to file, penalties will apply. Even if you are making a 0 profit, tender your record. This is me. Let's talk about allowable expenses, right? Under section 25, companies can actually deduct some reasonable business expenses, right, before tax. So such as your rent for office, your staff salaries, internet, utility bills, advertisements, marketing expenses, repairs of equipment, professional fee like audited fee, right? Statutory pension contributions, right? Now let's look at some of expenses that you cannot remove, right? Your personal expenses, your private school fees, personal home rent, like house rent, so not office. You will not disguise it as a office rent. No, it's not allowed. So you need to always keep receipts and your invoice. So this will actually protect your deduction. I've really emphasized on this. You are not making profit does not mean you should not file, okay? So under the Nigerian tax law, even if your company is dormant, you must file your annual CIT, company income tax, or you face penalty. That's how your TCC gets denied, right? Your tax clearance certificate. So you must still file. CIT is your annual tax on profits for registered companies, right? So whether as a 1 million shareholder, you are the only director, or you are the only shareholder, you must file. And the charges for CIT is 0%, 20%, 30%, depending on your turnover. So why the new 4% development fee which you are still going to watch video on that, actually applies from 2026. So expenses are allowed but must be business related. So filing is mandatory, even if for small profits companies, you must file. So please send us a DM if you want us to help you, to file in year 2026. And don't forget to subscribe to this YouTube channel and follow us on Instagram, depending on where you are watching this, or Facebook self, depending on where you are watching this video for. I can't wait to do live with you. See you tomorrow. Bye.